3 years, I think they're going to follow that 10, 15, 20% price growth. And because people have their heads up their ass about just only buying houses, they're missing out on the opportunity. Hello, everybody. This is the Wealthy Podcast. I hope you're having a lovely day. And today we are very lucky to have Tiffy Rubina to join the show. Tiffy, thank you for joining Louis and Sam and I on the show today.
My pleasure.
So to all of you out there, we are going to be talking about houses versus apartments. This is an age-old question. What should you invest in? Now, for a lot of us, we think you should invest in both. ¿Por qué no las dos? Is that how they say it, Tiffy?
¿Por qué no los dos? Yeah, pretty spot on.
Pretty close. So today we're going to talk about each of the investment classes. We're going to describe, what makes a house a good investment, some of the benefits and some of the risks, and then also what makes an apartment a good investment, and then the same, what risks are associated with an apartment. So let's start with Tiffy. Let's talk about houses to begin with. What are some of the things that you consider when investing in a house over an apartment? What can an investor expect to get from a house over an apartment, and why would we go that way?
Awesome. So no investment is perfect, and there's always going to be advantages and disadvantages. For me, when I'm looking at houses, what's going to be mostly the case within my budget is that I have to be a bit further away from the CBD, and therefore I need to be mindful of transport and infrastructure and making sure that there's employment hubs and other things close by. So those are some of the things that I consider when I'm looking at having a bit more of a land component, really.
So just to hone in that, because that's a really good point. With a house, more often than not, people are tempted to buy a house, and that means they've got to go further away from CBDs. And what that does is it takes them away from employment hubs, it takes them away from transport, infrastructure, and all the things that make a good area a worthy investment. And you're just particularly mindful. Is it fair to say, should you expect to be walking to train stations when you're investing in a house? Or is it, now you're thinking more about car parking, car spaces, how many bedrooms and all that kind of stuff?
Yeah, I'm being mindful. Not always I'm going to have a train station close by. It definitely is a plus if I do get it. And I've gone in the past for a strategy where I go to tier 3 cities. And it's the pros and cons of that, where sometimes I'm not attracting the best quality tenants, and those cities might not have a lot of infrastructure in place. But if that's the case, then I'm considering like minimum populations, because I don't want to be, for the sake of buying a house, going to the middle of nowhere where basically there's a high dependency on one industry or very low population. It's very tricky, right? So I'd much rather, as I grow my portfolio, I'm sticking more to the bigger cities. And in the bigger cities, you get more of the infrastructure, which is great. Now, that's where I start considering like the closeness and what's there and what's not, and the type of tenant that I'm going to be attracting.
So before we go to Sam, let me just ask, what do you consider a tier 3 city, and what kind of a population minimum is important to you when you're investing in, like when you're looking at good housing markets?
Cool. So minimum population that I would want, it's probably at least 30,000 people, not less. And yeah, it's not just about the population. There's other things like what are the employments in the area. If it's just linked to one single industry, I don't like it. It needs to have a variety of things going on. So yeah, that's probably the answer. But again, I'm stepping away of that strategy right now.
Yeah, you're getting into closer to CBDs.
Oh, right. Okay.
What was that, Sam?
No, I was just asking Tiffy, stepping away from what strategy?
From the tier 3 cities type of strategy.
I understand.
And usually being mindful that
Yeah.
even like in Australia, when you are wanting to go a bit more regional, it most likely will involve you having to have larger deposits. So I was talking over the weekend with a friend of mine wanting to buy his own home. He's living in Mildura, and depending on which part of Mildura he buys, he needs either 30 or 40% deposits.
Because of the perceived risk, banks want a higher loan to value ratio before you go and purchase. Sam, everyone knows you. You're the developer man. You go out and buy houses.
Yeah.
When you do your developments,
Yeah. Sure.
can we talk a little bit about how you see houses and what the major benefit is when buying a house over an apartment?
Yeah, sure. So look, I'm really quite old traditional. I'm a pro land purchase. I think that should be your first opt as a purchase investment. The way I like it is that when you are investing into a home, the pros is that there tends to be more capital growth, so higher capital growth investing in a home. I feel like there's always a way down the track to either manufacture your own capital growth as well. You know, the opportunities to either renovate, subdivide, or anything along that path if you want to go down to it. And what I like about investing into homes as well is that there's consistent rental returns. I feel like houses attract a certain type of demographic, such as like families, professional couples, double income, 2 kids, et cetera, et cetera. And I feel like families tend to nest in homes and they like to stay in certain suburbs for like schooling, work opportunities, or anything of that sort. So I feel like there is that peace of mind when you are investing into a home that the certain kind of tenant would like to stay there a bit long term. And I have to say, look, there are sometimes cons in investing into homes as well. So I want to echo what Tiffy said, and Tiffy said that there is no such thing as a perfect investment. And sometimes homes can offer you, can offer you a bit of the negative side of it, which is, sometimes the maintenance costs, and generally the upkeep. Prices are a lot higher, and sometimes that lower rental yield compared to the purchase price isn't always healthy. So I want to say that my first opt of purchasing is a home with a land component, but I just generally think as an overall, there is no such thing as a perfect dwelling. There are it's the factors that really play into role into your investment.
Yeah, depending on what your price is, I think clients will be scared of some areas that they'll have to go to buy a house.
Yeah, I agree.
And the areas that they go to will then bring up some questionable tenants.
Yeah.
And I've had nightmare tenants, and I've had clients that have had nightmare tenants, and Tiffy has had, one particular story where they got robbed multiple times and payments don't come in. And so depending on what the demographic makeup is of the area and how cheap you want to go, then there are other costs that come that aren't necessarily monetary upfront.
Yeah, sure.
I do like the fact that you pointed to tenancies, because when you do get a good family in there and you've chosen the right market, they are very sticky tenants.
Sure.
And if they keep on growing their family, they've got more stuff, bikes, ski equipment, whatever it is, and they don't want to go. But the other side of that is you're probably less likely to be increasing the rent. I've noticed that with my apartments, and we'll move to that, when you pick inner city apartments, there's the opportunity to every 6 or 12 months to up the rent. You've got that choice of moving the rent up, because if they don't want to stay, they'll move out and there's another tenant ready for you. Louis, when you're looking at houses, what are the major benefits that you see over apartments, and why do you like investing in houses?
I think I'll play devil's advocate if I speak on both sides of the equation. I think that my first point would be, if the drivers and the stats and data make sense, then the asset itself should always be looked at in a light, like in a clear light, if that makes sense. So just because it's a house and you've got an apartment next to it, if the drivers, and these drivers I'm talking about, population, employment growth, demographic, infrastructure and investment, and everything aligns, and it aligns for an apartment and it aligns for a house, the positives there would be, obviously we're taking a land component, as what Sam said. We're probably getting the best quality tenants in a house. It might most likely be a young family, and they're gluey, they don't move. Whereas in an apartment, I think that you'll have a rotating tenancy schedule all the time. Often not, there'll be 6 to 12 month leases. If you're lucky, they might go on for another 12 months. Often not, if you're in an apartment, you might grow out of it in a year. So I think investing in a house, you're always going to get land component, and that's probably the most ideal. But I don't think I think apartments get a bad rap, or more of a bad rap than they should.
And,
Look, I agree. My next point is going to be, let's talk about all the benefits of apartments. Because there's certainly a lot of benefits. But before we move on to that, I do want to say that I do love houses. There's something about owning a block of land, and for the more advanced investors out there are opportunities for you to almost land bank, where if you're choosing the right zoning, if you're buying in strategic locations, there are opportunities where in the future you may be able to do a duplex, or you may be able to do some townhouses, or amalgamate the site and become a Mr. Developer or builder. But that does take time, and there is, again, a cost that comes with that. Because when you do buy some of these bigger blocks, it may come with an old home. It may come with, it may be underutilized, meaning that you're spending a lot of cash up front to buy a big block, but the amount of rent that you're receiving is fractional compared to what you'd get for a newer, smaller piece of real estate. So again, there comes at a cost, and you may be stuck foregoing cash on a weekly or monthly basis on the hope that you can do something in the future. But then bear in mind, there are a lot more sophisticated developers, builders like Sam that are out there that may be seeing something that you're not seeing. So when you buy that block of land, you've got to be mindful of any easements or any covenants, or, what's a stormwater runoff, or, is the block in a flood prone area? Is there any issues with soil contamination? So I just want to highlight all of that before I go and also talk about the fact that, it is a big opportunity, but it comes with a whole host of issues.
For sure.
God forbid, you've got, termites or waterproofing issues, or any number of other issues that come with buying these little hidden gems. So before we move on to apartments, what else? Do we want to add anything to houses and why we should be buying houses? Like, what's the strategic angle behind buying that house?
The strategic angle is simply that there's only so much land, and it will eventually become very valuable and very scarce, in the generations to come. So if you own, a lot with a land portion, I believe historically it shows that land will always outvalue, say, strata apartments.
Now, I think
that was a mic drop.
Well, okay.
Sam, you're right, as long as you're comparing apples with apples, right? Like if we're within a certain city and we're comparing, let's say I'm comparing Sydney apartments and Sydney houses, right? Now, if we start comparing what we can afford within a certain budget, and it might be a Sydney apartment or Queensland house and land, that's where I probably would be more inclined to go for a Sydney apartment than a Queensland house and land, because of demand and supply. And when you just mentioned how land is limited, there is definitely a lot more land in Queensland than apartments in Sydney for the demand that they get, right? Like populations are completely different. The amount of employment, when Australia opens its borders, you'll get a lot of migration coming to where the employment is. And therefore, we just need to be mindful of what we're comparing against what within a certain budget.
Yeah, good point. Because what Sam said there is perfectly right. But even with apartments, there is certain amounts of scarcity within certain locations, because if I love town planning, it's a weird thing for me to say, but if when you travel the world and you look at different cities, you go to Barcelona and there's certain height limits. When you go to Paris, there's certain height limits. Sydney, Melbourne, Brisbane, different locations have height limits, which then determine how many apartments can go to a given area. And then, depending on what location you go to, there might be issues in the soil, which means you can't develop houses. So there's certain constraints. So with an apartment, what you're doing is you're buying airspace. And right now I'm sitting in an apartment, and a house wouldn't have the view that I've got. I've got 180-degree views of the ocean, and this is very valuable airspace that it's been growing very, very quickly because there's not that many people that are up on the hill that have this view.
Mm.
Now, this, I would argue, is growing faster than many houses in Brisbane, many houses in any, rural or regional cities. So, again, great point. You have to do apples with apples. You can't just say all houses everywhere are better than all apartments everywhere. And that's a big argument of mine as well. Lou, what do you think about this?
No, I agree. I think that people's choice if you're comparing same dollar figures, you can get some very differing pieces of real estate in different capital cities, as Tiffy mentioned, that you can get, for the same price as a 1+1 in a city, or a sought after location in Sydney. You can probably get 400 to 500 square meters of land in Brisbane. But where does the I think I asked this question to you, Dom, yesterday, or actually the three of you. Where does the tide swing? So when does the moment you start getting up to 650, 750 and you're looking at apartments, when does that moment you go, okay, why don't I drop back down and pick up a piece of a land and a house that may be 550 but in a different capital city? But I think we might probably be going into that later on, so we can touch on that.
We can talk about it now.
You brought it up.
Yeah.
So I want to say that there's never going to be a right or wrong answer, and it will have a lot to do with what you're trying to achieve. And you guys know me as Mrs. Cashflow. I love having good, strong yields, and therefore I'm always open to consider apartments, because apartments usually will have a stronger yield than a house. And especially as I grow my portfolio, when you start, you just choose something and go for it, try to learn. There's no diversifying. But now that I'm getting the chance to diversify my portfolio as I grow it, I have to be mindful about paying land tax in each different state where I own property. And therefore, it might be good for my portfolio to get a few of those great apartments where I'm in an area, as Dom mentioned, that is quite sought after. It's closer to a CBD or employment hub than what I could afford as land component, and I'm trying to limit my land tax.
See, I think that there also depends on the time in the market, what the apartment is. The price is so much. So let's just play. I'm going to pretend like I'm my sister for a second. So she hasn't bought a property yet, and she may want to take advantage of the first home buyers grant. So she wants to enter the market, and for $600,000, she'll buy a brand new apartment, and it might be a 1 or a 2 bedroom, depending on where we go and find it. She won't pay any stamp duty. Depending on what we can negotiate with the developer, it might be a 5% deposit. So instead of $60K, she can enter with $30K. So it really all depends on time, place, what you're doing in your portfolio. Are you trying to diversify? Are you trying to enter the market? I also think that there is, as Tiffy's saying, there's some really good, unique opportunities with apartments. I like to use my St. Peter's pad as an example. It's right on the edge of Newtown. It was very underpriced. It was an area that was going to grow, and because you could see that there's a new train station getting upgraded. The new roads are going in. It's just time, place, what's the opportunity? And some apartments are just absolutely awesome. I lived there for 3 years and I had a great time. And if I were to sell it now, I'd pocket a bucket load of cash and I can go buy a house later. So, yeah, it's hard to say. I've in saying that, I've just recently bought a house. So, what do you think, Sam? What would it take for you to buy an apartment? Because I know that you're heavily weighted towards townhouses and houses.
Look, I have to agree. An example. I just want to throw an example. I saw an apartment that I really, really like for myself. So not as an investment in Broadbeach around 3 years ago. Are my connections good? Yep.
Yep.
And it was a 2-bedroom apartment for $660,000, partial ocean views. I thought about it heavily, but I thought, you know what? I want to go back to my own investment strategy and stick to land component. I went back and I saw neighboring apartments in the same building all being sold for 800 and something grand. So in 3 years' time, I lost out at about over 200K in equity growth. So for me to say that the strategy of buying a home is going to be the only way for a successful portfolio is completely wrong. And so it's things like that I've missed out on personally because I was so adamant or so stubborn on what I think would work for me. So for me to choose an apartment, it would have to be based upon the area's growth, and it would have to be a cost relative, a value relative comparison between homes and apartments in the area, and that's when I'll identify whether or not I'm buying at good value and there is substantial growth. That's focused for the suburb.
So that's interesting. $200,000 is no small chunk of change, and your original investment would have been $60K or maybe $100.
Yeah, and I said no because I thought, that's just not what I do. I don't buy partial ocean views. I'm not at that age yet. I just completely sold myself out of it, and now the sister apartments are all being selling for 800 something grand, and I'm like, I could have sold that and bought a or just So just one of the big lessons and slash losses that you could make as an investor when you are, so focused on a certain strategy and then not seeing the opportunity for what it is in front of you.
Because you said something really important there, and I think it's especially important now. You said that the values in the area and the relative nature of the prices.
Yeah.
So what we're seeing across Australia broadly, particularly in the major metropolitan hubs, is house prices have jumped exponentially.
Sure.
10, 15, 20% price growth. Apartments have moved marginally. Now, what we've noticed, talking to CoreLogic, talking to the major economists, is houses move first and then apartments soon follow, or Sydney moves first and then Melbourne, Brisbane soon follows. There's the leader and then there's the carry. So I think that there's an opportunity now in Australia, and I one YouTube person commented, say, why do you always talk about apartments? The reason why we're talking about apartments now is because I can see a huge opportunity for them. I look at around Sydney, you can go and spend between $500,000 and say $700,000, and you can get a good apartment that in the next 3 years, I think they're going to follow that 10, 15, 20% price growth. And because people have their heads up their ass about just only buying houses, they're missing out on the opportunity.
I agree.
Or they're waiting an extra year or 2 years to get a bigger deposit because they've got this arrogant streak that I'll only ever do this. And I'm sorry to say it after you just said that, Sam, but that's the perfect anecdote.
Sure.
You missed out on opportunity. That 200K just doesn't get thrown in your lap every day.
1,000%.
And also it's very hard to actually put this in place, but a lot of people like following the masses. We all feel very comfortable when everyone's doing something. We all want to go and follow that. It feels comfortable. I try my best to not follow masses, and this is what I've been doing for a while. So if everyone's buying right now in Sydney and Melbourne has been suffering, I'd rather go Melbourne. If everyone in Canberra has been buying houses and houses have massively gone up in value, but the apartments haven't caught up, then this is the best time to be buying apartments in Canberra, right? So I know it takes guts to go and not follow the masses and invest where most people aren't seeing the opportunity, but there's a lot of catch up to be done. And that's right now the situation with apartments in many areas. So there's catch up to be done. If everyone went and bought land in the Western Sydney suburbs in the last year, then there's some great apartments as opportunities.
If you were an aggressive investor and you wanted to say time was your biggest, so affordability wasn't, you needed to remain affordable, say under 700 grand, but you had a limited time frame, say 5 to 10 years, and you really wanted to start spending on property really hard, and we all know that land value and houses will appreciate the fastest. Can you still be an aggressive investor and have an apartment strategy?
Absolutely.
Mm.
Absolutely. You can absolutely be an aggressive investor and buy some apartments. Again, you've got to be strategic. You can't just buy any apartment because that's how you'll get hurt. Same thing with houses. But if you're strategic about it and you choose the right markets, I think that that's where a lot of opportunity is. Land values have moved very, very quickly because we had a couple of things have happened recently. One, during COVID, a lot of developers, a lot of landowners decided to stop their developments, slow down the DA process, slow down the building process because they anticipated that there'd be a huge stop on the amount of demand. Then what happened? The government came in, put a whole heap of incentives in for people to go and buy brand new houses, to go and upgrade their homes and to start trading. So a huge amount of demand came into the market. And what happened was there was very little supply, a huge amount of government grants. All of these first home buyers and all of these owner-occupiers stepped into the market, sucked up a lot of that land. And you and I are now experiencing this. Houses everywhere have rocketed off. Apartments haven't really moved.
If you look at the approvals, I think we are at 10.5% below the decade average of unit approvals for the last financial year, 2020, 2021. So if it's demand and supply, and there's definitely a lot of approvals happening for houses, then there's going to be a shortage of apartments in the future.
Well, that's the point. That now all the conversations I'm having with different people and higher ups and Stocklands and Frasers, they're all now to push. They're pushing their DAs through. So we're going to see a flood of housing estates come into the market. Prices will remain relatively stagnant for a while because you're going to see a whole heap of greenfields come in, and the older houses won't move as much because I go, well, why don't I just go buy a new home around the corner in a nice, new, beautiful tree-lined suburb? And then it's going to be this massive shortage of supply because the houses are unattainable, are too expensive. I want to live in that area, so I'll buy an apartment, but there's no apartment stock, so that the prices will run there. I've seen it. I've experienced it in the last boom. You've all experienced it. So I think that, that's the opportunity for the next sort of 3 to 5 years. So team, let's move along and talk about the weekly toss-up. This is strata versus no strata. So let's go over to Louis and start with you. Let's talk about some of the pros and cons of strata versus no strata.
I'm actually going to offload the baton first to Tiff, because I don't want to repeat what Tiffy and I's conversation we had yesterday, and I don't want to steal her thunder and her point. But Tiffy made a very good point to me yesterday, and I think this weighs heavy on people's minds and decisions, and it also should come into the decision-making process when deciding whether or being very critical on strata. So Tiffy, please.
Thanks, Louis. So there is a misconception. People think that when you're weighing houses versus apartments, it's either strata versus nothing. And what people don't realize is what a strata will usually pay. Most of what a strata pays is insurance, building insurance. So if you're buying an apartment, me as an investor, I would only get landlord's insurance, and there's no need for me to pay additional buildings insurance because that's being paid by the strata. Whereas if I'm going and buying a house, I will have to do both building and landlord's insurance. So just be mindful that it's not something versus nothing, and it's the whole maintenance. So whenever I'm paying for maintenance of a house, all of the exteriors, the painting, the roof, etc., that's everything that needs to come out of my pocket. Whereas if there's a strata, it's going to be divided across many, many people. And then if you are worried about strata, you can simply focus, for instance, if you go to Melbourne, usually it has the lowest stratas, whereas if you go up to Queensland, because insurance for Queensland, because of their weather, is more expensive, strata is going to be a bit more expensive. So you can always try to manage that strata depending on what your preference is.
I think Dom said that's the exact point I was going to make. So I think also, would you say if you were interstate, a strata, a board or a strata committee, and you're paying the strata is almost just like an eyes on the ground, people in place to protect essentially or have that your asset in its best interest? Yes, you are paying a fee, and it probably seems annoying, or it can be quite costly over a long periods of time when you look at it. And if you're buying a house, you're paying nothing. But as Tiff said, you're probably going to add up in upkeep costs that probably a strata fee would be per year. So I think it probably levels each other out.
Well, it again depends on state to state. Where Sam's from, Melbourne strata is ridiculously low relative to say Sydney and Brisbane. And you're right. It comes down to how that strata is managed. You can be a part of some really good committees where they're looking to maintain the gardens, look after the building, and a well-maintained strata facility is excellent.
Yeah.
It can be 10, 20 years later. Sam's hates that I use him as a point of reference, but in his area, like that eastern suburbs area, there's some really beautifully maintained strata buildings.
And like, if you are listening to this and you are looking to purchase a strata property, my advice would be to you is, do some investigating into the overall, say, financial health of the body corporate, and maybe the complex in which you're looking to purchase. Just know that if you want extra features like barbecue areas, lap pools, gym areas, that comes at a price tag, and seek the advice of a solicitor who can obtain reports of levies that have been paid, individual owners within the group. There's a lot of ways of investigating, a good strata company. So strata just in general has a stigma of it being bad because you fork out money, but strata, in fact, the advantages is to keep the building, to upkeep the building, maintain the value, maintain the quality of the facade, of the common areas, et cetera, et cetera. So it's not all doom and gloom with strata, but I just know we all run to current affair and we see one little bad, one bad story, and in kind of ripple effects, every other strata company. So, and it's not the case. And I mean, look, there are disadvantages with strata, but with anything, there's the good and the bad, so
it comes at a cost, certainly. And look, I'll play somewhere in the middle where they both have their opportunities. Certainly up front, houses don't have that cost of strata, so it feels like it's cheaper. But there are actually some new communities that have a community title, where it's still a house, it's still Torrens title or community title, where they charge you a small fee for the maintenance and upkeep of the streetscape and the grass and the trees within the area. So it's a small strata-ish fee, but it's just, again, to maintain the area and make it look and feel like a really nice community. So again, it depends on how the strata is managed. As Sam said, if you do your research, look at the reports. Is there a sinking fund? Is there a capital works fund? How much money's in there? What's the history of it? If it's good and clean, that's fantastic. But if it's a nightmare and a mess, then keep away from it.
And we've seen some great ways to, there's a few examples, especially in Melbourne, where we've seen developers bring amazing amenities and things that are more and more important now after COVID, like co-working spaces, private gym, etc., etc. And how they manage it is, especially because Melbourne has low strata, it's actually, you can afford it without nothing weird going on. But even they've been pretty smart in trying to create spaces that can be rented out to like a wellness center or personal trainers. And all of that income can be managed by the strata to reduce your quarterly or annual strata fees. But even when we look at the annual strata without assuming any income of those particular areas, it's still very affordable and great to be offering amazing amenities because it will attract way more tenants than any other competing apartment.
Oh, Melbourne has some of the best maintained facilities. Like I want to buy a Melbourne apartment because of the amenity in these buildings. They're just jaw-dropping. Squash courts, indoor soccer courts, arcades, gyms, wellness centers. car washing, dog washing, all of this amazing stuff, but then the fees are low. And then also some of the developers are handing over the facility to the strata to manage and collect the rent. It's phenomenal.
Yeah.
Are there any other points we want to add to strata versus no strata? Nope. Okay, well, that leads us to the next segment, which is client questions. So, Jenny, to all of you that are out there that are listening, please keep submitting your client questions. We really do love seeing them come through. We had a whole heap come in, and I'll just go through them here. But there's one that I want to talk about because it's close to my heart. So Steph from New South Wales has asked about buying in a holiday town such as Jindabyne or the Snowy Mountains and our thoughts on that.
Dom, I actually 2 years ago analyzed buying in Jindabyne myself. And
let's hear what you have to say.
I looked at population and I struggled with a population of around 4,000 people. I know in winter it doubles, triples, but it's very much reliant on having a good season. And the issue is, for instance, now we have lockdowns in Sydney, right? And in Melbourne. People who were meant to go skiing for this amazing season, and I've done full ski seasons already, like twice, and I love it. It's just that it's very heavily reliant on one industry, and that scares me a bit.
I agree.
Sam, do you have an opinion on this?
Yeah, I do. I'm not a fan of seasonal rentals, I call them. To me, it just doesn't give me that security that as an investor that I project or want it to perform in a certain way. So that's just my take. I just feel if you are a first-time investor, I feel like you should dip your toes into a traditional, conventional way of investing before you start dabbling into the holiday side and holiday home and an Airbnb style or whatever the intentions are.
Louis, does your point, or do you differ much from that?
No, it's I don't know. I think it's a bow to complete your portfolio because you might be able to retire in it. The kids could move in it. It doesn't really need to provide you much funds. You could, it could not even be rented out towards the end if you've got enough properties under your belt. You could have bought it with equity, and you jet up there on most weekends to Nelson Bay or you fly up to Noosa or something. But I don't think it's a property to consider if you're serious in building a really well structured portfolio in your early years.
I 100% agree with all of your sentiments. It's the kind of move that you make when your portfolio is matured, I think.
Yeah.
I was talking about what I'd buy earlier this year. I ended up buying something. I bought a house in Nelson Bay. So Louis just gave a little nod to that. Now, I bought that investment with Charlotte, and the reason why we did it is because it's a lifestyle investment. I want to escape Sydney. I want to go hang out there, spend some time in Nelson Bay. It's certainly a good opportunity. You can rent it out, short-term rental accommodation. It will make you some money, but prepare to have your hands well and truly entrenched in doing the deal. There's a lot of moving parts. You got to think about a lot more than just the house. You got to buy the furniture, the forks, the spoons, the towels, the maintenance, the cleaning, the upkeep, and then now I'm stuck in Sydney and I have a house that's empty, and I'm paying a mortgage with no rent.
So Dom,
Charlotte is reminding me every single day.
And also it's very different. Like when I look at your investment in Nelson Bay, the population is completely different. If you had to make that property a long-term rental property, you could. So you have other options as well. I do feel that the seasonality, it's a bit less seasonal than Jindabyne, right? So there's different... It's a different type of, both are lifestyle and both are seasonal, but very different in consideration.
Yeah, a friend of mine actually bought an apartment in Jindabyne. I thought he submitted the question. So yeah, you're absolutely right. But Andy went and bought that apartment, and he doesn't need the money. Like, he bought it. It's currently empty. It's been untenanted. It doesn't matter to him because it's just, I have a bolt hole over there. he
Yeah.
is a snowboarder and he bought it specifically because he wants to escape and he's a quasi-professional snowboarder. So
Yeah.
unless you're prepared to forego that
Yeah.
rent and it's just a lifestyle thing, I wouldn't be relying upon it.
Yeah, not for the penny pincher investor, that's for sure.
No, not your first investment, maybe not your second,
Sure.
fifth or sixth, maybe.
Yeah.
Mm.
Next question.
Next question. So we'll do one more of these. What have we got here? Okay, this is an odd question. I don't know what the answer is here. So we've got a lot of people from Sydney asking us questions. So Tim from Sydney has said, which is a better tenant, young couple with good income or family with kids? Over to you, Tim.
I'd like to answer this. There is a thing with profiling certain tenants. There is no such thing as a certain demographic of a tenant is better than the other. I've had two professionals from PricewaterhouseCoopers have both rented out my place and both have left it in an undesirable state. Now, you'd think on paper that they're both executive, great income earners, that they'll look after the place they're in. Doesn't mean anything. I then replaced them with a family and two kids, and then they did the right thing. So the answer to that is that whilst your property manager is vetting out applications as to who's renting your investment property, there is a bit of luck into it. There's no crystal ball as to if they are or they aren't looking after the property, but to aim solely for a certain demographic, I think is a very silly way to look at a pool of tenants out there. So to answer to that is that there is no such thing as a better than the other. It's about your property manager, whoever is vets out these applications, screens them well, great rental history, and will provide some kind of assurance that the place will be looked after to a certain standard. You guys?
Sam, I've had the opposite experience to you. So
right.
just mentioned. So I've had this one property that has been my nightmare. In the last year, I've gone to tenancy tribunal 3 times, which is horrible. I'm currently going right now for the 3rd time, and the last 3 tenants have been families. Again, it's a completely different type of strategy. A tier 3 city, tier 3 suburbs. Families are coming and going. They're like quite unstable from a job perspective, a lot of issues in this particular city. And finally, my property manager calls me last Friday and says, Tiffy, I have something different for you if you want to consider it. So the daughter of my best friend just broke up with her boyfriend and she wants to move into your house with 2 friends. It's like, this is the first time I won't have a family in there. I was like, yes, let's go for it. I want that 20-year-old loving this amazing, and it's a huge house. It's 5 bedrooms and 2 bathrooms. So these 3 girls were picturing like 1 bedroom becoming a full walk-in wardrobe for all 3 of them, and like having all of these plans. It's like, great, let's try something different because families are not working for me in this city.
Yeah. Well, good luck with that one.
Thanks.
That sounds like a big fun house.
That sounds a bit scary. I'm glad it's 3 girls and not 3 guys. But then again, Louis sharing a house with a bunch of guys, and you take care of it,
Mate, we are the cleanest of the clean. So I can attest I'm going to send out a message to all property owners. If you are considering 3 young males, we aren't all bad. Okay. So they're often not, we do get a bad rap, 20s male in a city, but I'm only joking. We keep the place beautiful, neat and tidy, but to the point, I think that you can have good and bad on both sides depending on who. But to going on what we said earlier, Dom, having kids glued to a property, I reckon will often you'll see longer term tenancies and more willing to keep the tenancy or keep the home if rents are jacked up. If you're very disposable individuals like us, if our rent was pushed up any higher, then we got a rental increase and that's fine. But if our rent was pushed up to an extreme amount, we'd just say we'll move on. We don't have any ties to this area, neighborhood. We'll just go find something else in the market. Whereas a family might go, you know what, the kids go to school 100 meters away, we can afford an extra $150.
Cool.
I've got all types of tenants. I had young people that have fucked my place up, and I've got older people that have done the same thing. I had a tenant recently prepay 6 months. All sorts of stuff. So I've had good, bad families, young people, all sorts of stuff. I think, what you said, Sam, is the most important. Talk to your real estate agent. Have a look at what their ledgers look like. Get all the references in. Do the process properly. One thing I will say is don't rush the process. Don't take any shortcuts. And you're better having the property be empty for a week or two more and get the right tenant than get a nightmare person in, because I've had some nightmare people where they don't pay rent and all sorts of issues, and I was out of pocket like $8,500. So just be careful. Don't rush the process and do it properly.
So I do want to leave a message to everyone listening or watching this, which is please don't be discouraged by all of our comments just now about having had some negative experiences with tenants, simply because that happens as you grow your portfolio and with experience. But if your biggest fear is having bad quality tenants or high vacancy rates, then when we work with clients, we try to understand what's the most important to them. And we can always go and search for those more stable investments that attract the better quality tenants, right? So please don't think everything's bad, because overall the balance has been positive in all of our experiences, and that's why we keep buying properties.
So on that note, team, everybody out there listening, I hope you've enjoyed this episode. Don't be discouraged by getting any scary tenants. Houses versus apartments, there's benefits to both, there's risks to both. If you want to know more detailed things, subscribe and have a look at the Wealthy Academy. We do a deep dive in there. And again, if you're enjoying the podcast, share it with all your friends, subscribe, leave a positive review. And we encourage you to jump on YouTube, throw it down some, as Sam's pointing down, leave some comments and let us know about some of your experiences, and we can discuss them on the show. Thank you for listening. We appreciate it all, and catch you all later.